What's up, people? Welcome on the channel. My name is Clifford Mlauzi, and in today's video, I want to show you how I was able to take a very beautiful trade on US30 during New York session, and also how I was able to take a very amazing trade on gold, also during New York session. So let me just show you like the before and after. So this is actually the before on US30, and this is the after. Everything when we close the trade has played out, and this is the before on gold. So this is the after, and this is the before, this is the after. So all trades were taken, and we actually applied proper risk management, and everything was pretty good. And I would like to explain in detail how I was able to take these trades. So I'll start with the US30 trade, because this trade was shared today and it was shared in our private group. So if you'd like to join our private group, let me know. Monthly signals are 40,000 kwacha, and one-on-one lessons and mentorship is 100,000. That is lifetime. Otherwise, let's get started. So I'll just remove everything so that we can actually start on a fresh page. So let me do that. So I always start analyzing my chart from a 4-hour time frame. So this is what I'm actually seeing on a 4-hour time frame. I've seen that I'll just mark the lowest lows. So in this case, I'm having this low as my lowest, and I'm also having this high as my highest. And apart from these two, I'm just gonna extend these areas and then try to look for more lows. So when I say more lows, I mean like this low, and another low is this one, and another low is this one, and another low is this one, and then another low is right there, another low is right there, another low is right there, another low is right there. So I've actually marked only lows, not high highs or whatever, but just lows. So I'm gonna use these lows because you have to choose one. It's either you choose the highs or you choose the lows. So for me, I prefer the lows because like the low is just like an area where retracement is ending. So I like considering the lows. So you can actually see that in the lows, price is also like trying to react like right here, right here, right here, right here, all the way through. So we're going to use these vertical horizontal lines for future reference as we are moving through. So the next thing that we have to do is that we have to remember that the market moves in 2 cycles, which is impulse, correction, impulse, and then correction. After impulse, and then we might have, after correction, we might have an impulse, or we can have impulse, correction, and impulse. That's something that is likely to happen. But let's focus on what we're having on the charts. So when we come on a 4-hour time frame, we're trying to identify where the market is going and what we're having currently. So as you can see, on this correction, this is our lowest low on this collection, and on the same collection, this is our highest high. Yeah, so this is our lowest low and this is our highest high, so which means we're going to be interacting inside this area. Whatever we're going to do is going to be best inside. But if we break outside, we just know that we are going bullish. Or if you break it down here, we just know that we're going bearish. But for now, market is likely to be ranging inside here. But let's go and find out how we can go about that. So the next thing that we're going to do is to go on a 1 hour time frame. So on a 1 hour time frame, we're going to also do the same thing, identify the highs and the lows. So this one is the next low ending right there, and then this one is another low ending right there, and then Next thing is that's the other low, and more rows. Okay, just like that. So some rows we're going to use them for reference. Some are gonna be very useful, but for now, let's just focus on what I'm seeing right now. So you can actually see that firstly, this market actually came up here, broke structure, which is giving us a break of structure character. Let's do this. Yeah, the market literally came and then take out liquidity in these areas. So that's gonna be a break of structure, and whereby liquidity was just like taken out, and then the market also pushed down all the way through, came here to take out more liquidity that was resting below here. So this one is gonna also be this. And so the fact that liquidity has been grabbed on the upper side and then the downside, the next thing that we need to consider is you always have to remember that market moves in two cycles, whereby market, after it took liquidity, went up on an impulse, and then market corrected, market corrected. So what would possibly happen when liquidity has already been taken out on the downside? It's definitely that market is going to be pushing to the upside. You get it right. So when the market pushed down and then went up, corrected, it was like, okay, fine. I think the next thing that the market is going to do right now is just to find a proper entry to continue pushing to the upside. So what we need to do is to just come on a 1 hour and identify what would possibly bring price down. So in this scenario, I'm seeing this gap, which is our FVG at the moment. So I'm going to mark it like this. Yeah, this is our FVG at the moment on a 4 hour. And then we're having a correction, of which I also noticed that the correction had liquidity been taken out on the upper side, which is something that is really, really amazing. We want to see liquidity being taken out so that we can have confidence on the moves that we're taking. So in this scenario, this is what we're having. Liquidity was taken away on the upper side, which means now price is likely to come down here to take liquidity in these areas. And what are we seeing? We're seeing that price literally came right there and then took everybody out. Yeah, price literally came there and then took everybody out. So let's go on a 5-minute time frame to see what we're seeing. Yeah, so after they took everybody out, we're still having the FVG right here. So you can actually see there's also maybe gap on the other side. There's an FVG right here, and this part has been balanced. So even though price went up, I was confident in entering more buys or more sells when price had broken above this trend line. Let's say if price had started like trading above this trend line, I could have said, okay, let's be buying, but that had not yet happened. That had not yet happened. Also needed to see price filling this gap, pushing to the upside, but that did not happen. And then what happened next was saw price pushing to the downside, coming in this area. So when we saw price coming in this area, we had nothing to doubt because we knew that this could possibly be a reason whereby there's liquidity resting on this area, and we're likely to see price coming down here to take the liquidity and then pushing to the upside. So when the price was literally here, we actually entered. So you can actually see we already had confluences. The first one was this line that we added. This line, you can actually see that price all respected down here. Price respected. So it was likely for price to respect this area again. But we see another thing that is also sitting on the same area, which is the FVG right there. And then after the FVG, price literally came in that area, and then we had to place our buy orders with our stop loss above placed right here, hoping to catch more pips on this very beautiful trade. So this was like the idea behind taking this trade. So this trade really pushed so well during New York session, but you also have to remember that the market will always move in two cycles, which is impulse, correction, and then impulse. So if we use another strategy of mine whereby I use the Fibonacci levels, we would do this with the Fib levels. You see that price had came in the 60%, 61%, which is also very good, would normally push to the upside. But I already have the overall direction of the market when the market took out liquidity in this area, because also this is our this is the biggest, the lowest low at the moment. So we're likely to see price pushing to the upside throughout the day. Even like tomorrow, price might be like somewhere here, but this is enough. Now let's go on. Okay, so let's just like show you again on the before. Yeah, this is the before, and then let's show the after. Everything, it's pretty interesting. So this is like the after. So you can actually see that price is almost hitting TP, which is really interesting. And yeah, if you'd like to trade with the broker that I use, there's a link in the description below. You can sign up with XNACE and use the link below and let me know so that I can also add you to my Signal group. Yeah, if you're having any challenges with XNACE, let me know so that I can help you fix them. Otherwise, don't forget to like and subscribe to my YouTube channel. Don't forget to hit the notification bell, and don't forget to share these videos with friends. So now let's go on gold trade. How did we take a very beautiful gold trade like that? Okay, so this is what we're gonna do. I've already shown you the before. Now let's remove everything, clean charts. We go on a 4-hour time frame. Very easy to do. Remember, price moves in two cycles: impulse, collection, impulse, collection. So we have impulse, collection, impulse, collection, impulse, collection, impulse, collection. So after this collection, we might have an impulse. But where will the impulse go? Will it go up or will it go down? That's the question for today. So I'm gonna mark the highest highs. So this is the highest high, this is the lowest high. I mean, this is the highest high, this is the lowest low. So you can actually see that this low literally just came to take away the liquidity that was resting below here. Same thing, this one also came just to take away the liquidity that was resting below here. So when you see liquidity being taken down like this, we know that the next thing is going to be that, so overall, like a swing analysis for this one is a buy long term, so you can actually choose to buy whatever you can buy. As a swing trader, you can do that, and then have you maybe gold is gonna go to come to 2,500 or 25,000 maybe, so that's something for swing traders. Yeah, but for day traders and scalpers, let's go deeper and then see how these things are and how you can go about them. So what we're gonna do is to make them bigger, and then I also mark the lowest lows only, which is this one and this one and this one and this one, and lastly this one. So these are the areas, the major areas that we're gonna focus on. So one thing that is likely to happen right here, because we had an impulse correction, we might have an impulse to the upside, but let's find out more. So from here, what we're gonna do is we're going to go only 1 hour. We need to come right here and then focus and see. So we can actually see if we mark the lowest low, in this case, this is our lowest low, and this is our highest high, which means if price trades above there, we know that it's a buy. If price trades below here, it's a sell. But that's a huge space that somebody can make a lot of money off. So what we're gonna do next is to identify another high. So this is another high, and this is another low. Okay, so the price was literally somewhere out here. And then I want to show you like how it's able. Okay, so let me remove this one. Okay, so in this scenario, what happened? I actually noticed that price came down here, and when price came down there, what did it do? It took away the liquidity that was resting above here, and price went up in these areas. What did the price do? It came and then took away the liquidity that was resting above there. What does this tell us? It tells us that every time the market after taking away the liquidity, because when the market takes like this with wicks, we just know that the next is a buying move, the next is a buying move. So when I saw all these things, I actually came right here on this low. I think, yeah, it was on this low where I identified the last bullish candle before the reversal, which was identifying this area. And after we identified that area, we wanted to see price pushing above. So when price pushed above, it actually told us that, okay, fine, let's go on a smaller time frame. Yeah, smaller time frame like this. We had a little range. Oops. Yeah, smaller time frame like this. We had a little edge that needed to be filled. So this is like our correction on a smaller time frame. So we wanted to see this change of character being filled. So as soon as price came here and then broke above this area, and then we were confident to say, okay, fine, if price has broken above this, that means we're willing to change to go up, because at some point we had a feeling that price might come to trade below these areas, like price might literally come and then do that. But when price broke above and then started going up, it didn't come back in there. Then we had to enter a buy there with our stop loss just below there. And then this was our beautiful take trade. So we actually closed this trade manually, but our take profit was on the next high, which is this one. So this is the before and this is the after. That's how we're able to take a gold trade, and it was a very amazing trade. So if you have enjoyed this video, please like and follow, subscribe to my YouTube channel. Make sure that you stay at look for the next content and keep practicing. Otherwise, God loves you and God wants to see you win. So never give up on your dreams. Have a very good day. Have a very good night. Good morning. Goodbye.